everything crypto. Evgeny Gaevoy joins us. He is the CEO and founder of the crypto trading firm Wintermute. Evgeny, thank you for joining us here today. I guess just first of all, having the signing today by the president, does this pave the way in a real sort of fundamental way for stablecoins and cryptocurrency writ large to have a more commonplace use case every day?
No, absolutely. Lack of clear regulation has been such a boon on the industry, honestly, and this, in particular, the Clarity Act has been, very patiently waited by a lot of people in the industry, and we still have Senate to pass, but I think a lot of people are just very optimistic of how much progress, how much business for US specifically it will bring.
What do you think this does for institutional money that may want to look into getting into this area, at least even maybe more so than they were before? Does it sort of give them it's okay, this is safe, there's some regulation behind you now? I mean, is that sort of a check mark that they felt they needed?
Basically, one of the key things that Clarity Act brings is a lot of more transparency around how those tokens operate, about basically disclosures that various actors in the space bring when trading those tokens, when sending those tokens to somebody else. So this clarity has been a hallmark of, basically traditional finance, and now we finally have something like this ready for crypto as well.
Evgeny, it's Tim. Thanks for joining us. Fascinating times. And so this week shows that stablecoins are no longer on the fringe. And in fact, major bank CEOs are very involved. So that's great. And I agree that more regulation equals higher valuations. For folks at home who may own some Ethereum, they may own some Bitcoin, but they have no idea what the next move here is. How are you suggesting investors can actually either do additional work, look at the cryptocurrency? In other words, there's a lot of other places, and this week was a week where the crypto world was on fire, and it wasn't really Bitcoin, and it wasn't really Ethereum. So just your thoughts here.
Yeah, I would say one really interesting place to look at, and I think it's going to be a pretty major theme for this year, is the treasury companies. So, I mean, we all know former MicroStrategy, now just strategies that's basically made Bitcoin a lot more popular. But basically, there are basically dozens, if not hundreds, of those strategy companies that will be listed effectively by the end of the year. And I think it will drive price of a lot of long tail assets specifically, not just Ethereum and Bitcoin, but like a lot of long tail ones.
Evgeny, Bonawyn here. Quick question. I'm curious about some of the divergence we're seeing in terms of institutional adoption and allocation, mainly Bitcoin and Ethereum, versus some of the other allocations that we're seeing from retail investors, meme coins, higher beta coins, et cetera. Can you kind of speak to why that might be the case? And if traditionally you would think that if large institutions are flowing into something, that's likely where the quote unquote smart money is. Can you kind of speak to that divergence between the two?
Yeah, it's not very new for crypto industry in general. It traditionally was the case that institutions are looking at something, relatively safe, however crypto can be perceived as safe in general. So Bitcoin and Ethereum are the place to go effectively for more sophisticated, more or less like risk-averse investors. But on the retail side, people are always looking for a beta. They're always looking for a beta to Ethereum, for a better Bitcoin, better Ethereum, better Solana even. They're always looking for something that will move much faster and a lot more, especially in crypto where you can get a lot of leverage on top.